All right, welcome to the Phil Rosenberg Show. I have with me today Travis Egenberg, who is a real estate professional in New York City. He's the founder of Longview Acquisitions and managing director of Norman Barbara, which is a privately held boutique commercial real estate brokerage. Basically, he helps businesses with their Manhattan workplace real estate strategy, and he also operates that private equity real estate company. The focus for them is creating investment opportunities for themselves and their partners through multifamily apartment communities in Florida primarily. So you're based in Florida, you're based in New York, but you have a lot of business in Florida. Is that right?
Yes, sir. Correct.
All right. Thanks so much for joining me today, Travis.
Of course.
I have an almost unending series of questions for you. We're in such a strange time right now, right? We're in a lockdown. The economy is, by some standards, falling apart. Whether or not it's temporary is a thing that's being debated, and time will tell, certainly. I think most people accept the thought that there will be a bounce after the lockdown where the unemployment rate will go down, but how much down? How many of the jobs that we hope to return to are not going to be there when we try? This is a big, big question, right?
Yeah, for sure. For sure.
Yeah. So I want to talk about the market in New York City, actually. First, let's just get a quick snapshot. What's the market like before the pandemic? Like a week before the pandemic hits, how hard is it to get a mortgage? What are rental prices? What are for commercial and residential? Are we at the very top of a previously unseen market, or what do you think? Just before the pandemic?
For sure. So I'll try to answer that the best way I can. I think we had already seen across any asset class in New York City, we were already past the top. I think the top was somewhere around 2015, somewhere 2016. So we were already sort of past the peak for both rents and total acquisition prices, or price per square foot, whatever metric you want to look at. So we were sort of on the decline anyway. And one thing that's important to touch on that I think has its hand involved in many aspects of the economy is retail. Retail was already in trouble prior to COVID, and I think that COVID sort of.
So when you say retail, we're talking about like, are you talking about retail businesses, brick and mortar, or are you talking about the retail property, the properties that are held for commercial activities, or both?
So it's sort of one and the same. The lack of people having, let's call it the business, or being able to charge enough for whatever they want to sell and have the right volume. They just couldn't afford retail prices where they were. So there was already a lot of retail corners, good retail areas that were vacant, and they still are vacant. And I think that's going to be a theme that continues on for a very long time. Obviously, Amazon, any of these big gigantic companies, Walmart, I think that's a theme that's been playing for at least the past 10 years. And this COVID has really, I think, put a hammer in the, or put a nail in the coffin, so to speak, for retail. Retail was in trouble before, and now I think it's almost like it's going to be very difficult in the retail environment.
Well, so we're seeing that trend, right? Amazon is the best example of why it's happening, but it transcends Amazon, right? I mean, all businesses really have. If you don't have an online presence, you're missing a lot of the boat, right? A big portion of what's happening in the business world is that now. So especially in a market, New York City. So what happens? So these commercial properties are left vacant. Aren't the landlords forced to reduce the rents to a point where it does make sense for a brick and mortar to open up, or do they just stay forever empty, or what happens?
So the answer to that is yes, prices should go down, but it depends how these properties are purchased. A lot of times you can't go under a certain threshold of price per square foot because the bank that holds the note won't allow it. So you have to get clearance from your lending institution in order to lease something at a lower price per square foot. And if you purchase it at a high price, it may not make economic sense to rent it at such a low price. So there's a lot of, there's a lot of variables involved in this that doesn't enable landlords to be able to rent this space. Aside from not being able to cross a certain threshold in price, the demand may not be there as well.
So that equals foreclosure, or what does that equal?
For most landlords in New York City who have rental spaces available, it's not so much foreclosure. it is just a loss of revenue. But there are particular cases, like you see these big companies that go out of business. One retailer in particular, if you took a look at Barneys, a company that a lot of people thought couldn't go under.
They were gone a while ago, though. That's not a pandemic loss. They've been
It's
gone
not. It's not. But just to sort of touch on the state of retail, and I think this
also,
kind
though,
of
if I may add,
sure,
Barney is it has some extra variables because the whole textile industry, right,
certainly.
is a particular area of retail that has been ravaged. So we could go on for a very long time and talk about clothing shops
Sure.
that are they're done and have been done for this predates, in fact, the excesses of the internet. The textile industry was in big trouble before that. But I take your point, though. I think that that's probably true across the board, but especially in the textile industry.
I would say sort of furthermore on that point, as it comes to real estate with Barneys in particular, they could no longer pay their lease in both of their locations on the Upper East Side and then in Chelsea. And the Chelsea location, the company that had bought that property, which is called a triple net lease, which just means that it's a product that the landlord will buy and then lease out to a tenant, to a big commercial tenant, and they'll take care of most or all the expenses. So what happened is, now that Barney couldn't afford that rent, they backed out. The owner of that property put that to market, and they're selling it at a very, I would say,
buy or sell.
Yeah, it's priced to move, but nobody could really fill the space because it's a huge retail space that requires a big corporate entity to come in there and guarantee the rent. So that, I think, is the theme that was happening before COVID. Like I said before, only exacerbated what's going on. So you will see what you would call forced sales or some foreclosures of good retail properties if there's no tenant in there paying rent. So I think that's going to be a fallout from COVID.
Okay, so that's in Manhattan. It's the first floor of a lot of buildings. Some entire buildings are commercial. We have office buildings. Let's shift our attention a little bit to the rental market, because we're all concerned about what happens to businesses because people work in businesses, right? I mean, they're not just these random abstract entities. They support families, and they support the city, they support the tax base, and so on. So let's shift our attention for a moment to the rental market. So typically I'm gonna ask for a prognostication, but I first want to just give a little bit of an explanation. So just to really simplify it for our listeners, let's say I'm a landlord that owns a residential building that has 100 units, just because 100 is a simple number to do the percentages with, right? And let's say that ordinarily I have to maintain an occupancy rate of 90% to, let's say 80% to break even, and 90% is what I expect. That extra 10% is what I hope my profit will be, right? And now a bunch of my tenants lost their jobs, and it's not localized to my building, it's the economy. So now the average expectation drops from 80, which is my break-even percentage. Let's say I can only fill 70% with tenants that are paying the rent on time. If I'm a particularly liquid real estate holding entity, I can perhaps absorb that 10% loss over the course of time it takes for the economy to bounce back. But what if I'm not? What if I'm a landlord that doesn't have the liquidity or the ability? Maybe my credit is maxed out, and I'm stuck. What I'm imagining here is what happens to the tenants that live in a building that a bank says, "Hey, we got to take this back. You're not making your payments on the mortgage, and so we're foreclosing on the building." What happens to the tenants that live in that building?
Sure. So I'm taking a look at your scenario. So first of all, it depends on who's the lender in that scenario. If it's one of these big lenders, Fannie Mae or Freddie Mac, you'll go into forbearance. So to answer,
what does that mean, forbearance?
Sure. So forbearance means that you cannot afford to pay the note in its entirety. So you can't afford to pay your mortgage in its entirety. So the forbearance program will allow you to skip a number of months until the building has what's called stabilized, which means that the income coming in can afford to pay the note. And there are some carve outs in these debt programs where these agency lenders, which again is Fannie and Freddie Mac, they will allow you to miss a couple payments and tack it onto the back end of the loan. So that's what's going to happen first. That's the first process. But the question you asked is what happens to these tenants if, let's say it's a more, I don't know how to say this the right word, but let's say it's somebody who is not a big commercial lender. Let's say it's a private lender who lends a certain amount of money, and then as collateral, they have the property, which is how all these notes are structured. The property is usually collateralized.
Right.
So if the owner does lose chain of title, if they lose ownership of that property and it goes to whoever owns the debt, in New York State, not much is going to happen with the tenants because it's a very tenant-friendly state. So as long as they're paying their rent, or even if they're not paying their rent truly, nobody's getting kicked out of their apartments for the next, I would say, at least 4 to 5 months. So that's just, I understand that your sort of, your example was a little bit theoretical, but practically speaking, nothing is going to happen to a tenant.
Okay, so you're saying that in the short term, a tenant should feel safe enough. In the very short term, next 4 or 5 months.
I would, yeah, especially in New York State.
Yeah, so most of my listeners are in New York State, so I'm thinking about New York here. I do understand though that rent regulations, the regulations that maintain commercial rules, these vary wildly from state to state, even locality to locality, city to city. So,
but in New York State, once you go into forbearance, which means that you're not paying the entirety of the monthly mortgage that you own, by default, you cannot start kicking tenants out. That actually locks tenants in. Once you go into forbearance, you can't evict any tenants within a certain time frame.
Gotcha. Okay, so tenants should feel pretty safe based on that. So what's the nightmare scenario for someone? Okay, well, you're saying tenants should feel safe. That's fair enough. What happens to landlords? So okay, let's look at what's happening right now. Tenants are not required to pay their rent right now until at least August, at least, and we'll see what happens then. What about landlords that have notes with banks that are not able to collect enough income? I mean, I don't know what the default rate on rentals right now is, but I imagine it's pretty darn high because people are not working. So what is happening on the landlord end? What support is there for landlords? Because again, it's a chain, right? You can't have protected tenants but not protected landlords, I would think. So yeah.
You still have the same sort of programs like the payment protection program a landlord can tap into. There's other grants and there's other sort of loan products that they can gather some liquidity just to sort of stay afloat. But a lot of these notes, so when I say notes, I mean these mortgages, they're non-recourse if they're done the right way, which means that if a landlord defaults on them, they can't go after the landlord's personal assets. It's just the building itself. These loans are collateralized by the buildings, and in a worst case scenario, a landlord may not be able to hold on to that building, and then that note will be sold off to another investor. Typically, that's what's going to happen. Another investor is going to buy that note and take over ownership of that property and just figure out a way to sell the property or hold on to the property. So I would say in a nightmare scenario, a landlord loses his building, but there are programs, like I said, like the payment protection program.
I mean, if you're a landlord with multiple buildings, hopefully you're clever enough to incorporate each of those as separate entities.
Which most of them are. And sort of to that point, I don't think we're going to start to see any nightmare scenarios for at least 6 months until we really see the reverberation of the terrible unemployment numbers sort of hit the market. So that's kind of what I see if I'm putting a time frame to it at all for a nightmare scenario.
Let me ask you this. So again, we're talking about renters here. So the market in New York I'm 51 years old. I've seen rents double, triple. At one time, it was possible to be an artist and work as a waiter or a bartender and live in Manhattan. perhaps not the most posh lifestyle, but you could live comfortably enough to pursue your passions. And that really is no longer possible these days, right? So Manhattan has become, for the most part, let's say pre-pandemic anyway, uh, it's not really attainable for most folks that are not already successful, right? So suddenly the market shakes because so many people have lost their jobs, and landlords are looking at inability to collect rents on a large scale, and it becomes, to a degree, a renter's market in the sense that if you are locked in right now to, or let's say you're month to month, even better, but your rent is fairly high, you can look around now and find places prices have dropped. So my question is this: if you like where you live and you like your landlord, but you feel like it's time that the formula work a little bit the other way, what is a good negotiating position for a renter? How much of a discount should a renter be asking for in their rent moving forward? Or what things besides perhaps a rental discount might we look for? What's a good way? We're not trying to stick it to the landlord, but let's try to balance the scales a little bit. Yeah,
for sure. So I could sort of speak anecdotally. When COVID hit, I emailed my landlord to let him know, like, I'm not going to be sending in a paper check. So let me know your banking information so I could send you over a digital payment. And then we hopped on a call after that. And I sort of, he's asked me, how's the experience been so far in the apartment? I said, good, except for like the washer dryer is pretty noisy. So he said, maybe when your lease comes due, I'll purchase a new washer and dryer, and we could do that if you want to sign on. So there are things, something like, well, it may not be directly dollars and cents. You can get some other concessions, like maybe a free month of rent if you're going to sign a new lease, or improvements to the property, whether that's fresh paint, fix things that need to be fixed. So I think there's a lot of leverage in a renewal negotiation for a residential tenant to be able to either get a couple bucks off the rent, to get free rent, or to get the landlord to do some work. So I think that is completely a reasonable thing to ask for, especially given the COVID, if you have a lease coming up.
Good. So I've heard stories, friends have told me that they've negotiated I'm not just pulling this out of thin air. Friends of mine have told me that they've negotiated their rent down. In one case, almost 20%. In three other people that I spoke to, as much as 10%. It's a fairly substantial price reduction. And something, I can't remember the last time. Usually you just don't see the prices going up quite as fast in New York City. I can't remember though, did we even have price reductions in 2008, 2009?
The closest thing would probably be 9/11. That's kind of the anecdote that I've been hearing around sort of my circles, is that's the closest thing. And now you have to think short-term and long-term. Short-term, I think these one-year leases, whether it's commercial or residential, landlords are putting their best foot forward. But the long time frame picture, I'm not seeing deals on the commercial side of the business have anything more than a 10% discount off the face rent. Because I still think that landlords still have a pretty optimistic view of New York City over a 10-year time frame. But I completely agree with your point that in that one-year time frame, you are going to find that 10 to 20% discount. That's just going to happen.
Interesting. So it's a health crunch. It's a financial crunch. It feels like a social, emotional crunch. Let's talk about the production of income for a minute. A lot of people are looking at a layoff, a furlough, and hoping that their job returns, but are not 100% sure. Some people know, and some people know that their job is coming back, and others know that their job is not. So I want to talk about alternative means of generating income. In particular, it makes sense if you have enough liquidity, perhaps. I want to ask you about the liquidity factor. Let's talk about passive income generation. So what I mean by that, but I just want to make sure that my audience knows. How do we make money is it possible to make money while we're sleeping? We don't have to go to work and punch a clock or do a deal necessarily, right? So you have investments sometimes that accrue value. So I wanted to ask you, what do you think is the best way to approach passive income for now, what is the minimum threshold for entrance in terms of your own finances, right? But you can't do it if you have no money.
Correct.
Right. So yeah, both of those questions.
Sure. So to touch on passive income, I think that's it's always smart to have passive income in your life for a multitude of reasons, and it depends upon the source of the passive income. But my source of passive income, I like through real estate. So I like to provide these kind of deals, and I myself am invested in these kind of deals where I will put in a certain amount of money, and that money is usually minimum threshold about $50,000 per deal for the kind of deals that I go into, and these sort of
50,000, you said.
That's the minimum threshold for most of these kind of what would be called a real estate syndication. So that's just a vehicle that I like to put my money into because I receive checks either quarterly or monthly, and then at the end of the deal, the asset is sold, and then you get a capital gain. So it creates an opportunity. The way I invest is to have passive income coming in again every month or every quarter, and that's usually about 8% per year. So if I put in $10,000, I'll be making, $800 per year every single year for the deal until we sell, and then I'll make back, more money on top of that. So I try to target personally about 15% returns after sale per year. So that's sort of the way I approach it. And then really the best way to get into these deals is to have a relationship and then educate yourself on what you're buying, how the mechanics of the deal work, and why are you getting paid? Because if it's a mystery, then you shouldn't be investing in it because it could easily be some sort of crazy scheme. But you need to make sure that you know the person who's running the deal and what strategy they're implementing it to create these kind of streams of income that are then benefiting you as the investor. So you have to understand the logic of the investment, and also, like I mentioned, something like a $50,000 to $25,000 minimum threshold to get this passive income.
Good. Okay, let's give everyone a chance to reach out to you if they have questions, if they want to invest. Share your information, an email or phone number, business, whatever it is. Yeah.
My website is longviewacquisitions.com, but we kind of wanted to make it simple, so it's just LVA, Longview Acquisitions, Real Estate RE.com. So LVARE.com, and my email is Travis.Egenberg. That's EGENBERG, and that's at LVARE.com.
All right, Travis, I want to thank you very much for joining me today. This is a conversation that people need to hear. There's a lot of folks that are worried. I know there's more than one opinion about how to proceed, but people are really shivering in their timbers, so to speak. And I think this conversation may provide a bit of surcease for some. So let's hope.
And if you have any further questions in the future, if your audience sort of feels like they want to find out more, feel free to reach back out. I'd be happy to touch base again.
Will do. Right, thanks again, Travis.
Thank you so much.
All right, folks, thanks so much for joining me today. Want to tell you that we'll be back on Thursday interviewing, we actually all week long, we're just going to be doing tons of interviews. So tune into the YouTube channel, click subscribe, and join us every time we talk to someone new. All right, have a great day.